Are you looking for a reliable passive income? Well, don't go any further, because in this video, we're going to be talking about 5 high quality dividend index funds that allow investors to get exposure to high quality dividend in their portfolio. 3 of these funds are in Canadian dollars and 2 of them are available in US dollars. So let's get into it. All right, the 5 funds for us to review are 𝗖𝐋𝐈𝐿 or iShares Core MSCI Canadian Quality Dividend Index ETF. The next one is XDU or iShares Core MSCI US Quality Dividend Index ETF. Then we have XDU.U. It is available in US dollars, similar to XDU, but the only difference that this is available in US dollars. The next one we have XDG or iShares Core MSCI Global Quality Dividend Index ETF. It gives you exposure to global businesses, high quality dividend paying in Canadian dollars. And then XDG.U, which is available in US dollars for investors interested in US dollar investing. All right, let's take a close look at these funds' last closing price. The closing price for these funds are showcased here. As you notice, all of them are under $25 in their respective currency of either Canadian dollars for XDIV, XDU, and XDG, or US dollars for XDU.U and XDG.U. If you look at some additional information, let's take a look. All of them are available through Toronto Stock Exchange in their respective currencies, and all of them give you exposure to large growth dividend paying stocks. Their objectives are indicated here. For the most part, all of them are trying to provide a good way of exposure to dividend distribution income in these businesses. The inception dates for these funds differ. Most of them are incepted back in 2017, but 2 of them are incepted in actually October of 2019. This is mainly for the US dollar version of these funds, and in particular for XDU.U and XDG.U. If you look at the management fee and the management expense ratio, more specifically for MER, the lowest fee belongs to XDIV with 0.11%, which means if you invested $10,000, an internal fee deducted from the funds would be around $11, and the highest being at 0.22%. Still fairly relatively low fees for the most part. If you look at the past performance of these funds, and we have 2 we use here. One is shown here by the graph chart in terms of the charts that you notice here, and the other one is by tabular format. But let's take a look at first the graph that we have here. As you notice, if we pick the common inception date, it goes back to around October or November of 2019. Since then, the return overall, the best return, as you notice, belongs to XDIV with a cumulative return since November of 2019 of around 24%. The second best performance then belongs to iShares Core MSCI US Quality Dividend Index ETF, which is available in US dollars, or XDU.U, with a return of 16.1%. The worst performance here in this bunch belongs to iShares Core MSCI Global Quality Dividend Index ETF in Canadian dollars, or XDG. If you look at the tabular return for different time horizon, for example, the 1-year returns is showcased here for you. The 3-year return is shown as well for the ones that do have that 3-year return annualized. The 5-year annual return is shown as well. You see the 5-year annual return for the ones that do have that return belongs to XDIV with 8%. And the return since inception annualized as well is shown for you here. The graph could be played out as well. Let's say if you pick the 1 year, the graph gets updated, and the 3-year gets updated. But keep in mind, some of them do not have that far of a data as back as 3 years. So that's something for you to keep in mind as well as you're looking into these graphs. The cumulative return as a result is sure. If you select, for example, 5 years, for instance, the 5 years cumulative return for XDIV is hovering close to that 47.5%. Next, we're going to take a look at the specifics of the fund data, how many holdings we have beneath each of one of these index ETFs, and some other details. As for XDIV, you're looking at 20 holdings beneath that. For the XDU, we are looking at a larger number of holdings. We have 161. Same number of holdings for XDU.U, but it's just available in US dollars. As for XDG, which is the global businesses, you're looking at 348 businesses beneath that. In terms of the distribution, all of them do pay their distribution on a monthly basis. So you can rely on that monthly dividend distribution income. The highest yield currently for the past 12 months belongs to 𝗖𝐋𝐈𝐖 with 4.04%, upwards of 4%. The second best return then belongs to XDG.U, which is the Global Quality Dividend Index ETF with 3.43% distribution yield. In terms of assets under management, the largest asset under management belongs to XDIV with $690 million. It is then followed by assets under management of $246.5 million for XDG. As for market cap, we are looking at the number of outstanding shares here and the overall market cap size. And followed by that, we're going to take a look at the top holdings for these funds. For XDIV, the top 3 holdings belongs to Manulife, Royal Bank of Canada, and Sun Life Financial. Not surprising that the major exposure by the sector belongs to financial sectors at about 51%, followed by utilities, telecommunications, consumer services, and energy. As for XDU, their top 3 holdings belongs to Johnson & Johnson, Procter & Gamble, and Pfizer. And in terms of the sector breakdown, you're looking at a little bit more diversified sector breakdown of healthcare, consumer goods, financial services, technology, industrial goods, consumer services, telecommunications, utilities, industrial services, basic materials, energy, and real estate. You see, you have much more exposure and much more balanced exposure here, as opposed to the XDIV, whereby a huge focus is paid on financial sector. Similar kind of exposure for the US dollar version of the fund. If you look at the Global Quality Dividend Index, your top holdings are Johnson & Johnson, Procter & Gamble, and Nestle. And in terms of the sector breakdown, your main exposures are to consumer goods, followed by healthcare and financial services. You also get some exposure to technology, industrial goods, utilities, basic materials, telecommunications, consumer services, industrial services, energy, and real estate. We have made a video on our channel talking about the 11 different stock market sectors and providing good examples of high quality dividend stocks there. I do encourage you to check out that video if you haven't done that already. I'll add a link to the description of the video as well as a card here for your reference. Lastly, in terms of the geographic exposure, you notice for XDIV, 100% of your exposure is to Canada. For XDU, your exposure is mainly to United States and some exposure to Europe. As for the XDG, your exposure is again mainly to US with about 60%, but you do have exposure to Europe, much larger exposure, followed by Asia, Oceania, and a little bit of exposure to Canada and emerging market. I hope you found this video beneficial and you gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Let us also know in the comment section down below whether you are invested in any specific dividend paying index ETF. Would love to hear from you. Share those ones in the comment section down below. And of course, don't forget to subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, and penny stocks. We also talk about investing in crypto and ways to reach financial freedom. Thank you, and I hope to see you next time.